had this conversation coming for a long time with Andrew Weiner, a friend of mine who spent the past decade growing crypto exchanges and onboarding 50 million plus users globally. He's the former VP of Maxi Global and the current Chief Operating Officer of Weex. But not only that, he is, in my opinion, a mega brain in crypto. Now, he believes that in the next 3 years, $100 trillion worth of assets will be tokenized on-chain. But what chains, why, what timeline, what tokens, that is the question. And that is what we're going to talk about in this show. If you enjoyed this interview, smash the like. And without further ado, let's get going. I'm so happy that you're here. And we're gonna just read this thing out because you're, and I say this rarely, almost never, but you're one of the smartest guys I know in the space. Every time I talk to you, it's always blowing my mind. And we've been back and forth on this for like what? For 3 months, 4 months, 5 months. That we should get this interview going and just talk it out. So I'm super happy to have you here on the channel. I'm super happy to make this happen. There's a lot of things that we need to cover. So yeah, brother, thanks for being here. In a few words, for people who don't know who you are, can you just introduce yourself and what you do and why they should listen to all the crazy stuff we're gonna go through? I would appreciate that, and then we can get going.
Hi everybody, I'm Andy Weex. I'm a giant compliance nerd in the world of crypto. I've been in the industry for about 10 years. I've studied under some of the masters of the industry like 𝗙𝗘𝗙𝗙𝗪, Greg Penn, the former director of Thomson Reuters WorldCheck, and some of the innovative minds behind 𝗙𝗘𝗙𝗪𝗙𝗪. They were the delegates from Canada that helped write this giant piece of legislation we all know as travel rule. So that's my background. And these days, I'm the Chief Operating Officer of Weex.com, which is a centralized cryptocurrency exchange boasting over 1,700 pairs and nearly 10 million users worldwide trading on that thing every day. So thank you. I'm so happy to be on the show.
Brother, so I think the biggest thing that we've been talking about is, I asked you, I think we met in Monaco when we started really deep diving into this, and I said, what would be your major tokens that you would be holding and why? And so you took me down the rabbit hole of this entire thing and how tokenization is going to take over at $100 trillion coming. And these are the things that I think everybody kind of understands and knows and sees, but at the same time, we just don't really position ourselves. We don't really believe it. We know it's coming, but we don't know how. So take me down the rabbit hole again. Let's start with I don't want to go into the ETH, Solana, all that rabbit hole, but I want you to explain to me, when you say that $100 trillion coming on chain, why is that, how you position, and what the whole thesis behind it?
Absolutely, and thank you so much for giving me the platform to bring this education to the market, because I find that this particular subject is like the most mystified of all the things that people talk about when they're looking at alt season and they're trying to figure out where is that next inflection point for the cycle. And what everybody seems to get wrong is they don't understand that all of these financial products and services require a backbone like capital markets has. And in capital markets, a backbone would be something like the Depository Trust Clearing Corporation. This is a quadrillion-dollar plus settlement desk, clearing desk. And why is that important? Well, if we think back to GameStop, which was like a financial revolution in and of itself, GameStop and what was happening on Robinhood, all those orders, where they're flowing through. Who's the market maker? Who's the actual desk paying people out on something that's gained so much value and liquidity? And that would be the clearing desk, like Depository Trust Clearing Corporation. Now in crypto, the money that people are bringing to the system, it's thin. It's not like a giant institution with hundreds of trillions of dollars behind it there to make sure that the price that you're trying to get is going to be there for you in a second from now, because that's how volatile crypto is right now. Every second, prices are swinging, and within a minute, it could be drastically different than the position you were trying to take, just 1 minute ago. But in traditional capital markets, money moves a lot slower. These types of institutions are stacking up orders and settling them slowly in like 2 to 3 business days. And they ensure that there's more liquidity behind every asset at all times, giving you a lot more assurance and insurance on the flow. But in our ecosystem, if we just use like a token that did a big airdrop as an example, a lot of the people that get that airdrop, they might be coming to our ecosystem with like $0 a fiat. They may be coming in through the airdrop only. That was their onboarding into crypto. And then they sell that token, they get real fiat for it, or USDT, a stable of some kind. They go back into the market, they start trading leverage. So even more money that they don't have is now being put against their positions and what they're doing in the system. And when you scale that by millions and millions and millions of market participants around the globe, you get real thin liquidity situations pretty quickly. There's so many people that came to crypto with no money, brought value, but didn't bring money, and may or may not have taken money out of that system. So this is like one of the mechanisms of crypto that makes it pretty unstable, is the fact that we don't have this like giant liquid infrastructure that's always ensuring the stability in the market, and that settlements across like the entire every platform are equivalent. Let's use another great example of crypto. I think Cronos is a good case study in the point I'm trying to make here. Cronos shot up to 38 cents on the Trump announcement. We all saw that in the market. What a crazy
if anybody doesn't know, Cronos is the token of crypto.com. So that's their native token.
And the Trump Foundation's announcement, you know, we saw the market reaction. It went to like 38 cents. But then all these futures markets across all these platforms with no liquidity for Cronos opened up. And all these people started to trade against these futures markets. So if you're now bringing in a bunch of people that haven't contributed to this TDL, to any of the liquidity you're now taking from it, en masse on leverage, of course you get, you know, instability. There's a couple more case studies and examples of this, but I want to pause there so you can get back to the audience here with the point we just made.
Look, I think for me the biggest thing that people what was striking me from this whole thing, it's obvious that when you look at the biggest argument, you know, we meet people every day, we talk to hundreds and hundreds of people every month that are getting into crypto, and the biggest argument everybody makes is exactly this, that I'm not investing in a volatile risky thing like this. And then I say, okay, but have you seen the Amazon stock in 2000? Like, have you seen that one, which is the biggest company on the planet now, or one of the biggest companies on the planet? And so we are very early in the industry, but still being in 14, 15 years, people don't understand where would liquidity come from and how will regulation actually help with liquidity. So that was the next step that I think we should really talk about. You mentioned the DTCC and how the regulation is going to change, and can it change to the extent that these tokens, and now we have like 50 million tokens to the 4 trillion market cap, whereas yes, we had 700 billion market cap in 2021, but we had maybe 20,000 tokens. So how does that whole thing unfold, and what's the next step?
So what they've accomplished, and this is pretty impressive, is they've satisfied a pilot to prove that you can bring markets on chain and you can still keep control of all the security and risk assurances and compliance that's expected of you as not only an issuer, but also as a broker dealer, an exempt market dealer, and all the other, you know, services that come together to give people access at scale to these types of financial products. And that's super exciting because, you know, this is like a 10-year journey. Security tokens kind of came onto the scene back in almost 2016. And here we are in 2026 coming up on the horizon. And this press release now with DTCC and the Canton Network, where they're going to get a 3-year pilot to tokenize some of the $100 trillion of RWAs that they manage there on Wall Street. And that's just one desk in one jurisdiction. Now, if that's successful, and we see the beauty of a framework that comes out of that, that's now turnkey for any issuer, anybody that wants to IPO, anybody that wants to take, you know, their metals, their securities under reserve or under management on chain to deliver more efficient and effective access and scalable access to being able to buy and sell and participate in those marketplaces. That's when we see crypto go from 3% global adoption, just like the OGs and some institutions in it, to maybe 40 to 50% of all available financial participants. That's wild.
Here is I think now we established the whole situation or problem solution. Here is where my question really comes in, and I think this is one of the biggest things that people wonder about. What happens? Fine, we do have, I 100% agree with you. Tokenization is the way forward. Blockchain is the way forward. I think it's not a question anymore, really. They're going to run these pilots, whatnot. But one of the major questions is, does that mean that 𝗙𝗥𝗬𝗓 has utility here? Does that mean that 𝗦𝗛𝗢𝗓 has utility? Does that mean that, 𝗏𝗏𝗏 has utility? I'm just named 3, but I could have named 100 other or 1,000 other. That doesn't really mean that the tokens that we know today are the ones that we invest for the future and hold them. How does tokenizing the S&P will pump my altcoin bags?
Well, so here's the thing. How is AI going to change the market? Yet how many projects and meme coins went to market with no utility, no use case, nothing but hype and community, suddenly like, oh, this is something I could build towards. This is a way to take what we've established as an ecosystem and add to our tokenomics to now either bridge or fork or whatever, to be a part of this. I think of Telegram and the Ton Foundation as like another one of these great case studies where how many, projects had pivoted over so they could build into the Ton app and then get turnkey access to a pent-up demand of consumers. So I do see.
If you look at these charts, they're down, they're dead. It's not into the future. We're talking about 6 to 12 months.
I mean, crypto was at $15,000 at less than 2 years ago. So if we look at the actual all-time lows and highs of each year, just go back to 12 months at 90K. Holy shit, we're nowhere close to what it was. So if there's still all that room, yeah, I still do believe that there's plenty of potential out there in the developers, coders, builders, and the ecosystems that they have to mobilize their audience and mobilize their teams towards capturing that medium when it becomes available, because right now it's not available. Like, look, the US right now is talking about opening up the banking system so any crypto company without some long process and approval can build a product with their APIs and plug into financial markets and then deliver a service through what their chain is and their apps are, whether it's a wallet, whether it's an app, whatever. This is already real in Brazil, where they have the open banking API. There's so many jurisdictions where there are good models and case studies that once we get them in the 2 biggest markets in the world, which is North America and parts of Asia, that's what I think kind of that inflection point is. Look, we have 3% adoption in crypto. So many of that 3% came to the system with no cash. They contributed no money to the system. They came in on an airdrop. They've been participating in the system on leverage in a lot of cases. That type of market participant is not how people are going to get onboarded for the next 97% of adoption. The types of market participants that are coming in with hundreds of millions of dollars. And that, I think, is what the difference is. The type of consumer in the audience changes in the next 3 years.
The question is, where does that money go? Because I agree with you. And I think it's all, I agree with you. I think, adoption is probably, in my opinion, a little bit higher, but I 100% agree with 80%, 90% of these people came in with no money or very little money, especially looking at the last years, looking at all the Telegram games, exactly as you mentioned, looking at all the meme coins, looking at all the airdrops, looking at all the, everything that you could just farm to but where does that hundreds of billions of dollars go into if it doesn't go into ETF tokens? First of all, why would it even go into ETF tokens other than Bitcoin, ETH, and maybe some selected Solana, maybe some selected? Like, why would anybody buy Doge on an ETF or Cardano on an ETF? You know what I mean?
Well, that's the only vehicle that's available to the consumer right now.
Exactly.
Technically.
Yeah, but that doesn't mean they will buy it. It doesn't mean it makes sense for hundreds of billions of dollars to go in and buy it. My question is, where does that money ripple down? Where does that $100 billion go in, and how do I position myself today for that? Because, and just something, again, I'm not as knowledgeable in the whole tokenization, most likely as you are, not as close to the fire either. But if I look at this, what makes sense to me is that any of these companies have to create their own chains, whether it's a layer 2, whether it's a layer 1, whether it's an open chain, whether it's a closed chain. They have to create it for security purposes, for compliance purposes. And once that's done, they're going to open it up for participants to connect, to bridge, to whatever, to those chains. That means that all the 100+ layer 2s become basically obsolete if this is the trajectory that we're looking at. Why not?
So right now, if we use the internet, and Web 2 is a great example, and when we switch to like HTML5, how many people just had to build towards the next medium and pivot, right? And still access the consumer this way. I mean, even early in the internet, when people are like, why would I buy pins and needles on the internet? Why would I buy buttons? Why would I get my printing? Why would I You know, why would these types of business be on the internet? It should be technology business on the internet. It's technology, right? No, this is a weird way to think. It's a new vehicle. And that vehicle, how people innovate to plug into it and make monetization on their existing tech without too much, you know, reiteration on what they've already developed and delivered to the audience. I see that as a true concept, a true option, especially if you built on something like Ethereum, where you have a foundation that certainly isn't going away anytime in the future. This is my bullish use case. Like right now, and I can't name one market where I could do this. I can't go get access to actual gold markets through a token. Can't do that right now. But that's like the most liquid market I could plug into if I was going to buy an investment today, anywhere. So what about when we tokenize precious metals and minerals on something like Canton, on something like Ethereum, on something like Avalanche? That's the use case that's not here yet, that I think will begin the trickle down effect. Because what's going to happen is somebody like me, who might get wealthy on like a traditional investment like telecom, a traditional investment like tech. Once I made a bunch of money and I could play around, I started investing in things like AI. I start playing around. I might go buy some Doge tokens. I go kind of take on riskier and riskier positions on more eccentric kinds of use cases.
With
and
like
I believe
0.2% of your capital. With that 0.2% of your capital. You go and do that. But what happens with the remaining?
At least, unless you're, you know, really irresponsible, which a lot of people are. We can't apply the logic to the crypto market that everybody's going to show up and act like a responsible investor like they do in the traditional market, because no consumers really ever behave like that.
Yeah, I agree. So you mentioned ETH. Let's go down the ETH rabbit hole a little bit, because you've been saying ETH is, you know, the run, and I was like, but Solana and this and that, not necessarily make it into a competition and talk about, you know, we can as well, but rather why ETH? Why ETH? Everybody's burying ETH. ETH is, you know, the old generation. ETH is going to zero. Why ETH?
Okay, so I'll use the use case of a merger and acquisition as the best tokenization story for why ETH. In a merger and acquisition today, you have to verify every ultimate beneficial owner that's involved, and you have to determine a bunch of the rules around how much somebody can own. So in some jurisdictions, it's 10% or less. Some might be 25% or less. Could be based on the exemption you got for using tokenization as a vehicle to sell your company, whatever that looks like. That process on Ethereum is like a 30-minute process compared to the real world right now, where it takes like 8 to 12 weeks or longer to do a merger and acquisition in the traditional market. What people discovered is if you take 3 smart contracts, an ERC-20, 772, and a 1404, and you use them for the crowd sale itself, the minting and the transference, if you use them for the rules, who can own this token? Where can they own this token? How much can they own this token? And then the actual possible switchable is, once somebody has a token, does it move? Can it move to another wallet? At what conditions under which can it move? That was proven in a pilot. That's something that takes like 5 years. So any other medium or chain coming to the table with an M&A use case right now that hasn't gone through a half a decade of pain and suffering with the jurisdictional regulator, they're not going to solve this problem before Ethereum already has. And I think that makes me super bullish in Ethereum, because I know that mergers and acquisitions cost like $400 billion a year in administrative waste. There's so much bullshit that goes into 2 companies buying and selling to each other. And then all the directors, officers, stakeholders, and ultimate beneficial owners coming to the table to sign off on that. You know, with a blockchain like Ethereum and the smart contracts, the way they layer them with ZK, we could like secure the identity and information of the directors, the officers, the stakeholders, the articles of incorporation, blah, 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 blah. Try not to get too technical here. But that savings, that $400 billion of savings of moving something on chain, is just one application.
And the insane amount of time as well. Insane amount of time as well. Is there any one? What about Solana? You know, could Solana or any other chain do this? And 2, what does this mean for layer 2s?
So Solana can't execute this technology, but it doesn't mean Solana doesn't have 1,000,001 different types of use cases and case studies around it. Because what Solana has proven is you don't need to be a highly technical person to participate in cryptocurrency. Is that you can come to the table, write a contract, get access to like the most fervently loyal audience there is. You know, people that are going to show up and take a peek at what you're doing. They're some of the most curious people I've ever met in my life going to Breakpoint, meeting the people that go to that kind of conference. Why wouldn't you want to build and plug into that type of community? It's the same kind of argument for Telegram Foundation. It's like, why wouldn't I want to be trying to access the types of people that use Telegram? These are the most tech savvy types of consumers in the world. They care about their privacy, and they're like perfect case studies of what it means to be a cryptocurrency, you know, a community participant. I think that's the strength of the Solana chain and foundation and audience, is that fervent belief and support that you don't really get in other areas. And forget about crypto for a second, buddy. Like, let's just talk about traditional finance and what it's like to raise money. And when I go into a VC's office, like I did 10 years ago, and I said, hey, they're probably going to regulate crypto one day. Maybe we should build KYC and AML tools for crypto before they regulate it. And how many VCs were like, get out of my office? What are you talking about? If I had a community like Solana of people that were a little bit degen, a little bit risky, a little bit, you know, hey, why not? Maybe they will do it. This is another argument for prediction markets. Like, that's another audience of just really, really helpful people, really supportive people. I don't know the word for it here, but it's almost cult-like, the way they come together to make something real. And that something may have no use case at all. It could be a meme coin with no utility. And it's making people rich. Like, if that's the power of your audience, is that not something to be respected and watched?
So what does this mean for layer 2s? If Ethereum is the clear winner, what does it mean for layer 2s?
They're only a clear winner in one category. This is, again, this is why I say this conversation is kind of a lot broader than who's the best and who's the worst. Crypto has such versatility. Crypto is agile. Like, the layer 2 of, you know, another chain right now may not be something that is being consumed by every single major company and has high TVL and lots of audience right now. Let's say 2-3 years from now, there's an innovation, there's another vehicle that they could plug into that makes sense, that matches their tokenomics utility.
Yeah,
like, it's not.
I still see the, like, I understand what you're saying. My biggest trouble with it is that if we take out the casino from crypto, if we say, okay, it's not gonna be the casino anymore, we're gonna have real, you know, companies, real money, real people coming in, building real stuff in the real world as well, connected, utilizing the blockchain and current technology, we don't need 50 million tokens. Like, the prophecy of the alt season happening in the coming whatever is just, based on my understanding, is diminishing more and more and more. And I know that's not what you think, but I want to understand why it is not what you think. Why do you think that this actually brings liquidity to all the different tokens that we already have and hold and love and hope for?
Well, I didn't say that people have, hold, and love 50 million of them. Let's make that clarity and distinction right now. I believe that there's a place for hundreds of thousands of different types of tokens, and the direct, you know, correlation between traditional markets, real world assets, and the 100 trillion of inflows I see from that particular sector, propping up a bunch of things that are built on and around Ethereum, Solana, Avalanche, even Kronos, and these other types of.
Yeah, but we mentioned 4 or 5. Like, let's multiply that with 10. We're looking at 50 tokens, 60 tokens. What happens with all the rest of them?
I don't think anybody can predict that.
How do you pick the right horse then?
Well, that also comes down to what people are building and what they're doing. Because community right now is a metric for the reality of the use cases we have. But I think the proliferation of the case studies that I keep alluding to that are not accessible and not available to everybody are my catalyst for the next quote-unquote alt season. Because I think
let's talk about that. Let's talk about that, because I think that's how people also can position themselves. So now we understand why Ethereum and what. So we just as a TLDR, we're looking at $100 trillion coming on chain through tokenization in different forms, different categories. Most likely it's going to be different chains, but not all of them. My understanding that we're looking at max 50 to 100 tokens, and obviously there will be new and new connections coming up, new projects coming up, new use cases. We see how prediction markets took over the world in 3 years, 2 years, and every major outlet quoting them. Yet it was another degen place to be. So understanding all that, what's your time frame, and how do you pick the right horse, or how do you find the right horse?
So I think the time frame is going to be 3 years or less. I don't think it's a 4-year cycle. I think the 4-year cycle is completely disrupted by the new market participants.
I agree.
I think the types of money and players at the table now trade differently, and that they're creating metrics and are able to trade at scale in a way that, you know, the people that started 10 years ago could not, and that we've based a lot of our data on could not. You know, a lot of the data of crypto is based on people that had less than $1 million total ever and got very wealthy, but didn't come to the system with 10, 15, 25, 100 million already in their back pocket, ready to deploy, ready to ride out positions and margin in ways that nobody ever quantified at any desk. This is the new market participant is changed the timeline. So I think it's 3 years or less. Now, how do you pick a winner? Is I would pay very close attention to who's unlocking new market access, who is bringing in onboards that are bringing money to the system, that are bringing liquidity and capital to the system, not people that are just onboarding the crypto curious so there's more people in crypto and more people trading crypto, but people that actually bring a financial value to the table. And that could be tokenization vehicles just for, you know, accessing securities, but that could also be tokenization vehicles for mergers and acquisitions, just representing ownership of something. These are all different types of use cases that fall outside of a traditional like ETF model. We're not just bundling things together and making the new crypto mutual fund in this next cycle. What we're doing is we're plugging into industries, mediums, and verticals that have real cash flow that exceed the entire market cap of the existing industry of crypto. These verticals we can plug into real estate, businesses, golds, precious metals, tech. This is what I think is going to bring the value. And it's 3 years or less. So just pay attention to who is unlocking and plugging into that new market participant. Who's the one that's facilitating, you know, not airdrop hunters, not bonus hunters, but like real VCs and real investors and people that want to utilize the medium the way that they utilize financial markets.
What's your portfolio looking like? What can you share? So like, if I was to deploy, let's say someone is sitting here and he is like, holy shit, this makes sense. Like, I want to and I'm holding Shiba Inu and I'm holding, you know, dog, chicken, fish wing, smoking, whatever. And I kind of want to, and I want to start deploying for the future, you know? Like, people will look into the mirror and be like, holy shit, what am I doing? Let's start taking this seriously. What are they buying?
When I consider my own risk appetite, and what I'm willing to take risk in, and this is my own personal opinion, it's not financial advice, as we all know. I look at what has the best chance of utility in an infrastructure that's going to see daily use. You know, my brother, he was one of the last private owners ever of double bubble gum before it was swallowed up by Tootsie Roll. And I asked him one time, of all the companies you could have bought, and all the things you could have done, why'd you buy gum? And he goes, because you need it every 25 seconds. You chew a piece of gum, the flavor's gone, you need another one. It reinvents its own demand. And I thought that was so fascinating. So what in this market, what use case, what application creates continuous demand and consumption? And where has the service provider positioned themselves to create value every time it's consumed? Now, when I look at what meets that definition, I look at anything with utility on the credit card network. Are you going to be using this layer one to do settlements of credit cards, of Interac and debit, of these types of transactions? So I'm just going to get a fee for that. That fee is going to go into the ecosystem. And that's something that gets used every day, hundreds of trillions of times. Anytime somebody goes to the counter, clicks, you know, checkout on the shopping cart. So that's an excellent definition of what's going to meet my bubblegum test. as I like to call it now. Yes, we just invented this on your stream here. The bubble.
Oh, it's amazing, amazing.
And there's a bunch of different use cases for this. So, settlements, that's number one. Number two is it representing ownership. People will always own things. How much do they own? What do they own, et cetera? There's fees taken for that. So that could be mergers and acquisitions. That could be all sorts of stuff, man. But that's kind of the criteria that I'm applying. So if you run that through your graph, I'm sure it can tell you a bunch of different tokens right now that meet the bubblegum test, that are continuously consumed, burned, recycled, they flow. What won't pass that test are things that are stagnant, the things that have actually no reason to move. And if there's no movement, then there's no value being created. It's just a store. So that's not something that I'm taking any risk in right now. No storages.
So what about Bitcoin? How does Bitcoin fit into all this?
I think Bitcoin's what people are going to be selling right now to go do things, because Bitcoin is what has the most value right now. And it's the thing that's most in demand to people to buy. So if I'm somebody in crypto that only has crypto and needs to fund my next 100 ideas, my next 100 inventions, my next 100 projects, my next 100 whatever, I'm going to have to sell that. That's what's going to get me money right now. So if I sell anything else, I'm going to send a domino effect through this already thin liquid market. And that's not what's going to happen at the top. You're going to see people using Bitcoin for what it's meant to do. It accumulated a crap load of value up to 120K. I know personally from my own sphere of influence, I know more people that bought at 40K than I do the people that bought in the last, $100,000 of price action. So those people are all building right now. They're all trying to make sure that they beat Wall Street to the table. I mean, there's a real timeline here for when traditional markets and institutions create private networks that maybe close the gap on some of this hopium. And take some more of those 50 million opportunities off the table because they fit that problem solution fit that so many people have been building for in the beginning. These are things to think about.
So when you when you say 3 years, do you think are there any specific points, any KPIs, so to say, that you're looking at, any events that you think will influence? I'm talking about regulation. I'm talking about.
It's the press releases related to the Depository Trust Clearing Corporation and any settlement and clearing desk of that size in any market. Because there's one in Hong Kong, there's one in MAS. There's so many different jurisdictions that have an institution of that size and scope that if they enter the market in a meaningful way and choose a chain and choose an audience and choose a medium for their products to be a vehicle to get to market with what they've done, that's something we should be all over. Everybody should be all over it.
All right. So how do you see 2026?
I'm sorry?
How do you see 2026? What do you think about
2026?
There is I don't know how much you follow crypto Twitter, but there's like this two main camp, right? 4-year cycle, it's over. 2026 is shit. October, we're gonna get the bottom. And there's the other side, which I'm belonging to, which is liquidity is coming. You can look at so many different catalysts. 2026 should be, in my opinion, extremely bullish. And I just want to understand what you think, how you see 2026 happening.
I think right now we have a buying opportunity up until a major point of inflection out of the two markets that I mentioned earlier, the North American market and the East Asian market, and how it is that they bring that next wave of adoption, that next, let's say, 1 to 2% of the audience, because those market participants bring the liquidity and bring another point of inflection. But up until that moment, until we see that press release, until I see something that confirms that those people are at the table now and that they're being onboarded and that they are participating, I think it's a buying opportunity. There was a buying opportunity like this at the end of 2018, beginning of 2019. That was, one of my favorite cycles, the end of the ICO. And the primary use case of crypto is gone. How many more did we invent since then?
Yes.
Right. So I think the 2021 as well. So these are the two kind of repeats. We're seeing it right now, 2025. Is this the last buying opportunity? No, because I promise you, in 2 years from now, when a Bitcoin's 150K plus and it cracks down briefly to 110, people are going to be like, oh my God, it's dead again. We're going to crash. We're going to crash to 100K in a year or two from now. You wait for that headline.
Yes, I agree. I agree. All right, so I think rounding off soon. If you had to pick 3 tokens, I don't know if you're allowed or you can, or if you had to pick 3 tokens to hold for these next 3 years, knowing what you know now, what would you hold?
I would hold WXT first and foremost, the fastest growing cryptocurrency exchange of the last 12 months, run by one of the most innovative compliance professionals the industry's ever seen. Shout out now in the link below in the video description, Weex.com, where new wealth is made. I truly believe
for very important, Weex is not sponsoring this video. I just love Andy, and I thought we were gonna make this happen. Genuinely, I know it looks like it is, but it's not. So, but yeah, we're gonna include your
staking, yield, and all the other things that made every other platform utility token skyrocket once they did that. So I think there's still a bunch of feature requests that we're delivering on. They're going to make WXT quite a performer, quite a buy in the next 12 months. I think Chronos, because of their relationship with the settlement networks, and how many Visa cards have been issued that are directly tied to Chronos. I think the activation and the use of those visas as time moves forward will be quite a catalyst in the performance of that. And Bitcoin. I think Bitcoin is always a buy. You should always have Bitcoin. Bitcoin is the backbone of crypto. Bitcoin is the reason we're all here. Bitcoin is the gas that makes the fire burn.
It's interesting you didn't say Ethereum. Why didn't you not say Ethereum?
Well, because Ethereum's almost 3 years out. Didn't you say 12 months?
No, I said for the next 3 years. For these next 3 years, the major catalyst.
Well, the Ethereum and WXT are tied together. I'm just waiting for that pilot, man. It's honestly the tokenization use case that gets me so excited about Ethereum. And I'm keeping my eyes on all private networks. Like Canton, is an honorable mention. Anything that has a pilot ongoing right now that's going to open up more than the market cap of the industry. And man, can I say something? The market cap of our industry is kind of misleading too. This is something nobody talks about. It's $3 trillion, right? How much Bitcoin has never moved? How much crypto is lost? How much of that 3 trillion is actually not available? It's not linked to anything that you could trade against or buy and receive value from. It's parked. It's in the cold wallets. It's offline, so to speak. So what is the true number? That's something that is very poorly quantified. And again, zooms further in on the fact that he keeps saying that where we're at today is microscopic. With the purpose, the potential, and the amount of consumers that are not yet at the table, we're talking about the wrong things a lot of times in crypto. We should just get through onboarding, the next 50 million people to just buy into crypto and be in the system before we really narrow down like a laser on what's going to happen. Because how can you tell what's going to happen? Like if you told me that we're going to have an election and 1 million people can vote today, but next year it's going to be 10 million people can vote, and we don't even know who those next 9 million people are and how they behave, I would be really skeptical about your predictive math and formulas, right? I would kind of think that, hey, maybe you're just using a lot of things that are, what's the word for it? Coincidences, and trying to say that, hey, I've discovered the formula.
Yeah.
This is not science. There's too few people not at the table yet who could disrupt things. I mean, I remember everybody thought malls would never go away. And then they're like, why would I buy tea online? Why would I buy my clothes online? I can't even try them on. How many malls are left in your neighborhood? Most are gone in mine. I think that that's going to be true for a lot of ways that we transact. Check cashing stores, remittance mediums, a lot of these things are about to get seriously disrupted. So that's my bullish case for crypto.
Ethereum, I'm still on the token side. People are gonna bash me if I don't get this through you. Ethereum for the next 3 years. You said they're going hand in hand with Weex token, right? So that's the 2 token, okay? What are the next 2? What would you, if you had to say today, sitting here, obviously,
Chronos to Bitcoin.
Is that for the next 3 years as well? But if that's the case, then I go back again. If that's the case, why would you not start looking at? You can look at Ondo, for example. Again, we're just throwing names out here. You can look at the tie-in with real world assets and BlackRock and whatnot. You can look at different. You can think about Coinbase or Base and think about their DEX, for example, Arrow. Like there's so many different.
You didn't say pick 10.
Say again?
Those would also be, you didn't say pick 10, you said pick 3.
Yeah.
You mentioned a bunch that if we made this list 10, we could fill that list. If we made this list 50, we could probably fill that list too. There's a lot of things to keep your eye on right now. And a lot of people should be very bullish.
I love it. I love it. Amazing.
Andy, bullshit.
Andy, I love talking to you. I think it's always fun. I hope that we can catch up soon in person as well. Any final thoughts you have for the community, for the show? Anything that you might have still?
What a privilege it is to even get to come on something like this. I mean, I can remember last year in December having a very hairy moment in my hotel room looking at the market. It was a very rough day. I think it was December 18th, 19th, or 20th. You did the emergency stream. And you were the first person to come online while I was panicking and feeling terrible. And it was really like an angel from heaven. Like your tonality and your, it touched me in my heart the way you were talking. And I'm so happy to have people like you in the industry, to even know you, that you're doing like a public service. You were a real improvement to my mental health on a tough day. What a wonderful thing that you've done and continue to do, because you're a genuine product user. You are not a person that can be paid to say something's good. If you don't like something or disagree with something, you give your real honest opinion every time. And that integrity is thin in a world full of greed. So thank you. That's my parting thought is everybody here, make sure you're following 100X Club, Crypto Banter, my friends, everybody on the channel, Sheldon, Ran, Dylan, Chart Hack, everybody. I don't want to forget anybody. But I love every single one of you very much. Kyle, Mr. Dukes. Never forget Kyle. And I just appreciate the opportunity to talk to your audience. You've built a wonderful audience of people that really let their voices be heard. Guys, in crypto, community is the entire backbone of what makes it work. Without a consensus of community, crypto is obsolete. Crypto doesn't exist. So remember that this industry is bigger than me. It's bigger than exchanges. It's bigger than projects. It's you. It's in your heart. It's in your soul. It's the reason it works. So keep at it. Whatever you're building, build harder. Sometimes prices will be down. Sometimes your positions are going to get wrecked. Whether you were longing or shorting, whether you were a bear or a bull, it's not a zero-sum game in crypto. You know, it's 1v1 in a lot of situations. But if we're working together as a team and we continue on the mission, which is delivering secure, reliable access to financial services to people everywhere around the world, which is the mission of cryptocurrency, I think we're in a very good place. I mean, I got rich from it, but as long as people have their lives improved in some way, shape, or form, I think that's a job well done. And cheers to all of you. Check us out at Weex_official. Weex.com.
We're gonna put your link in the description, brother. I appreciate you being here, truly do, and I hope to catch up with you. Maybe every 6 months we should do this. Maybe how are things happening, or if there's something happening, I just bring you on. I truly appreciate everything you guys do, and I'll see you in the next one.
Let's check in on that list. Let's look at where they're at 6 months.
Look, I think people are like, I see so many people who are saying that so on October 17th, I actually said that this was the bull market, guys. We're gonna correct. We're down 60% since then on most of the tokens. We're down 35% on Bitcoin alone, and I was like, and all the people that were saying there that it's not and it's the pullback now start to capitulate. Like you see it in the timeline. A lot of people are like, okay, come back in 4 years, And so I think we're getting very close to the bottom. I think Q1 should be the bottom somewhere there, and I think we should start rallying in 2026. What comes after that? 2027, 2028. We had to see. I'm expecting like a major crash across the board, but yeah, I think we're just gonna come back and check in with the list, check in with each other. I appreciate you a lot. Check out Andy down in the description. We're going to get you link in, and I'll see you in the next one, brother. And that is it, guys. If you have enjoyed this, let me know in the comment section. Smash the like, subscribe to the channel, and make sure to follow Andy and me on X. There's links in the description to all our socials, and I'll see you in the next one. Take care.